You see a lot of prop firm traders showing you payouts, getting funded, but no one is teaching you a full blueprint of exactly how to scale from nothing to 10K months consistently. This blueprint is going to show it all, from the best prop firms to exactly the process to take to get there. So let's get into this. So we're starting off with, you're going to be on a challenge, and on this challenge you have to pick the best prop firm. And as we can see, we've got FTMO. They are the GOAT. I've been with them now for over 1.5 years and they've never disappointed. They pay out on time, and when you're going for the first prop firm, you have to go with the most reputable firm in the industry, and that's going to be FTMO. Look, max allocation 400k with the ability to scale to over 2 mil. And you have two options here. Either you're going to be a swing trader or you're going to be a day trader or scalper. And this determines what plan that you go on. So first of all, going into this, you're going to start with a 100k account. This is the optimal strategy. This isn't going to be how long it's going to take you. It's going to be the full strategy and making sure you can get to them 10k payouts as quickly as possible. So you're going to start with a 100k account, and FTMO are actually doing a discount now for their 10-year anniversary. So it actually makes it cheaper than all the other prop firms I have in this video. We can see that it's about $500, minimal trading days 4, no limit on getting a profitable day, which is perfect. Swing plan 30 to 1, normal plan 100 to 1, with 10% overall drawdown and 5% daily drawdown. So with a 10% profit target and a 5% in phase 2, it's harder to pass than a lot of other firms. This is why I recommend upping the risk. And in a challenge, you want to pass as quick as possible ideally. So I recommend with taking more trades, you drop your risk because you do not want to get caught for over risking. And on the swing plan, if you are taking multiple trades at once, I'd probably say 1.5, but 2 to 2.5 gives you the optimal ratio to pass phase 1 really quick. And look, that's only 4 to 5 R on a swing and 6 to 10 R on a standard. And traders might ask me, well, what if I can't afford to blow a prop firm overall? Because so many traders will only have the ability to buy 1 or 2 challenges. And if you're in that position, I've made a full PDF of exactly how to never fail a prop firm challenge again. So that will be in the description. Get onto that. It's a perfect way to maintain your challenges and not blow them. If you have the money, I recommend taking this route because it is the optimal version. So what you're going to find is after doing that, you will pass phase 1. At this stage, you need to accumulate more funding. So you want to take another challenge. And this way you'll have one phase 1 and one phase 2. Going into this phase 2, it's a very important thing that you can drop your risk a little bit. And you only need 5%, so 2 to 3 R is one trade. As long as you get the trading days 4 in, you just need to take 1 win. If you do find that your first win gives you 4%, you need to work out in that next trade how to maintain the profit you have in that account. And what I mean by that is, for you to calculation, let's say you do need 1% to pass and your risk to reward of your trade is a 2R. That means you can risk 0.5%. And if you lose that trade, you're still up 3.5%. You're not only minimizing your loss, you're also maximizing that chance on the next trade. That is a higher chance it will win and you will pass that phase 2. With the phase 1, use Traders Connect, copy up and trade the exact same on the phase 1 as we did over here. And once you have that, you will have 100k in funding. You pass that phase 2 and your phase 1 will already be up 3 to 5%. And at that point, it's purely about getting that 100k funded and getting that refund at all costs. And what I mean by this is, as soon as you hit a little bit of profit, close the trade. Just secure that refund. It allows you to have more capital to put into challenges. Once you get that first payout, you're sorted. Phase 1 again, use that, copy trade, and leave that account to the side, because now you're stacking up these. It's so simple, and it's like $10 a month to copy trade. So congratulations, you have your first payout. You've secured, and the proof is in the pudding then. You've secured that first payout. You know for definite this process can be repeated over and over again. The confidence you get from that first payout is like no other. At this point, you're going to receive a $500 refund. You purchase the big 200k, because now that one account with the phase 1 that's still going will give you the 400k max allocation. You've had your first payout. Your phase 1 will either be passed or will be very close to passing. And at this point, you can just see how the scaling goes in. 100k funded, 100k phase 2, 200k phase 1. So on 100k funded, keep your risk low, don't over risk. You're trying to keep your funded accounts. It's the most important thing. I recommend 0.5. If you really do trade less frequently, 1% could be enough, but keep that risk low. 100k phase 2, just keep trading it. 200k phase 1, look, these take care of themselves at this point, because you're getting payouts, you're enabling to buy more challenges and keep that profit. Before you know it, this is the exact way I got max allocation. 200Ks, 200K, proof of concept, max allocation. Once you do have 2 funded accounts, we're going to discuss the importance and the key thing about keeping your funded accounts through cycling them. When you get to this point where you have multiple 100k or 200k, 100k, 100k, you're max allocated, you have to branch out to different prop firms. And at this point, there's 2 firms that I recommend. And I recommend probably taking 2 challenges, 100k each. First of all, we're going to go on to the fivers. And what you want to do here is max out the high stakes, because the high stakes you can only get 100k allocation. You can see here, these are the rules. They're a little bit different. The 100k account is actually around the same price as FTMO, maybe slightly more, depending if you get a discount. You do need 3 profitable days of 0.5 in phase 1. You get 100 to 1 leverage, and the phase 1 is only 8%. So these challenges now, you've passed 2 to 3, that 10% profit target. These 2 are 8%, so it's even easier to pass. Once again, keep the risk to what you've been doing. You don't have to pass a challenge. You're just sticking to the criteria that got you to pass in the first place. Grab that fivers account, get the first payout. There you go, proof of concept again that I've had payouts from these. I've done this exact strategy. Now I'm currently on Funded Next, and I'm 2% off max allocation with them as well. So what I would recommend with Funded Next is they have a very similar rules to FTMO in the way that there is no minimal profitable day in 0.5. Just hit the trading days. The leverage is high, allowing you to just pass phase 1 quicker than FTMO. Phase 2, again, takes care of itself. If you're using the profit model, where you're in profit, you will not go back into deep drawdown, and just use that same model. And look, this is going to take you a while. This isn't going to take you 1 month or 2 months. This might take you 6 months to a year. It took me between May 2024 and November 2025 to accumulate nearly $1 million in capital. And you can see here that the payouts are Funded Next. These are reputable prop firms that will guarantee you with a minimal amount of stress that you can complete these challenges and get payouts. And that's what you want. You don't want to be going for props with 50% discounts. It's just too much. So stick to this blueprint. Copy trade on the fivers to FTMO. The most important thing for Funded Next is you cannot copy trade. So do not, whatever you do, start copy trading. You can't even copy trade between Funded Next accounts. So these trades will be taken separately. But just remember, when you're going into a prop firm challenge, you can use Funded Next, you can use E8. Any prop firm you like, funding pips, use these if you're confident that you can pass, and make sure you check all the rules, because the biggest thing in trading that traders don't realize is each prop firm has its own certain rule type that you may get caught out. I've been caught out before with challenges, and the last thing I want to do is blow challenges unnecessarily. So at this stage, you've probably maxed out on 1, 2, 3 prop firms, and you're at the point where you've got 800k allocation. You can see here, total funding now is going to be 800k, maybe $1 million. You are going to have the ability to spread out your capital. And what I mean by this is, when you're at this stage like I am, you've got to start thinking like a hedge fund. And this has only took me 2 periods of big drawdown on all of my funding to realise I go 1, 2, 3 months without a payout. I'm 7, 8% down on my funded accounts. This is not what you want to be doing. Going into next year, this is the approach that I'm taking. I've realised so much through trading funded accounts that it's so different to what you think it's going to be like, where you think I'm just going to make 3% on each account, I'm going to get a 30k payout. This isn't the end goal. The end goal is not to make the most amount of profit as possible. It's about keeping your funding and scaling. So whatever your allocation is, split it up into 3 or 4 funds. And the way you're going to treat these funds is going to be the same, but you are going to rotate. So fund A, you're going to split up into 2 separate 200Ks. You want to make sure you don't just get max allocated and allocate one 400K account. If you do this, that 400K gets blown. It's a very dangerous situation where all of your funding's gone on that prop firm. So I recommend keeping that different. Funded Next, you're going to have a 100K and a 200K. Don't put them all into one 300K. As much as it's tempting to, because it looks good, the profits on the payouts look amazing. Don't do that. Just make sure that you stick to allocating a 4 split or a 3 split or a 5 split. Depending on your capital, you will know exactly what to do. And what I mean by this diagram here, it's just the money printer. It's exactly what you need as a prop firm trader, because you're thinking like a hedge fund manager. You're not putting all your risk into one account. So we're going to start here. You start on Fund A. You've got 200K FTMO. You can risk 1% per trade on all of these. You start on this one. You take a trade. If you get a profit and you get the payout, perfect. Move on to the next one. If you take a loss, doesn't matter. Move on to the next one. Because what this allows you to do is, in drawdown especially, traders get all flustered about losing their capital, losing their allocation, or needing a certain amount to get a payout for the payout date. That's not what you want to be stressing over. So as soon as you take that trade, regardless of the result, profit, you're going to get a payout, let that reset to 0, move to fund B. You might take a loss on fund B, so be it, move to fund C. Then again, you might take another loss on fund C, but as you go into fund D, look, you're down 2R here at the minute. If you had this profit and you traded all your accounts before the payout date, 2 extra losses, you might be at break even. And here you want to go into fund D, where you know if this trade wins, you will get 2 more payouts if you have 2 different prop firms. In this case, we've split it up, so it is 2 different 100Ks. And that is the rule. So we come to the rule. Payout cycle, trade wins, continue to next block. Only pause when the payout is reached, because you do not want to be giving your money back to the markets. And with prop firms, the money's only realized once you actually get the profit and you go into payout. Being in drawdown does not make you lose real money. And by this point, you should have had your first refund. So you're pretty much set on a risk-free basis on all the accounts anyway. And just keep rotating really. And we can see here, the loss protection here is if the trade loses, you go on to the next block. The loss never compounds. Of course, you might get to fund C after taking the first loss and you might get another loss. But even if that account goes down 4% and the other 3 have all had payouts, 2 payouts, 3 payouts, it doesn't really matter. And the main goal of funding is to get payouts, put it into your live account and put it into more challenges. And if you're in deep drawdown for 2 months like I was, you can't buy more challenges because you're not getting any income. If you're acquiring a 3-4K payout and then you have 3 more losses, well, you can put that into more challenges. It doesn't really matter. So this is the real way to keep your funding and to rotate the accounts. And I've only realized this after a year of being funded. And it's only when I've got enough capital now, this is the way to do it. And traders want to think that getting 100, 200K in funded is the game. It's not the game. That's just the start. The whole idea is to rotate the accounts. And what I mean by mathematically, you can ensure you get your 10K payouts. Let's have a look at really what my stats are like. My average risk to reward overall is 2.5 with a win rate of 40%, not even 50%. If I take 8 trades a month with that profit split of 80% and 1% per risk on each trade, I will win roughly 2 to 3 trades a month. Let's say each win is 5K. This is a 4K net profit for the payout. 3 wins times 4 in a month is 12K net payout. It doesn't matter about the losses. The losses don't come into this because you're cycling the accounts. And there you go. I mean, as simple as that. It's over 10K a month. If you have 1.6 mil and each block is 400K, you're making 24K a month. And obviously some months are better than other months, but I never want to come into a month and say, this is the exact profit I need to make, because I know the market dictates that. I don't know whether I'm going to have a good month or a bad month. And as a result of this fund process, it just makes you think like a whole different type of trader. And it will just set you apart from most traders in prop firms, because you will keep your funding. And even if you blow one, by the time you've blown one, you will be in challenges of another and you will add to the funds, and then you can just do whatever you want. And the freedom is there to do this as you please. 3 funds, 4 funds, 5 funds. The more funds you have, the more risk is spread across different areas and assets, which is great. And you can even do this not through necessarily prop firms. You can do it through pairs. So you might trade gold, Euro USD, Pound USD, and you have 1 fund for gold, 1 fund for EU, 1 fund for GU. This also works really well, and you can diversify however you want. But the main goal of this in trading is this just stops you over trading, stacking losses, revenge trading. All the psychological errors that you have in your trading will come from drawdown. And every time you get a payout in prop firms, and this is the scary thing about them, is you're always more likely to start on a loss. So you know in your head that you want to get the profit for payout date, but you know likely you might have 2-3 losses in a row. And then you're trying to gain all that back. You don't get attached to one firm. You don't feel stressed. It stops you going on tilt, which most traders blow their funding because of this, and really just takes the pressure out of your, when am I going to get a payout? And this just helps you become a better trader overall, because you trade systematically, not emotionally, keeps your drawdown fresh. You're never worrying about one particular area, and 200K per area or per fund is a lot of money, and so much can be made just off that. If you are looking at prop firms and you're currently in a job and you're saying, well, what is my goal? Most people's goal is just to make 2 to 5K a month. If you can do this, you're going to be better off than most traders. So make sure you're not thinking about hitting the Hail Mary home run to start with, and just slowly growing your funding and then getting to the points where you can cycle. And that's the game. That's how you scale up with prop firms. This is the ultimate way to do it. Test it out, see if you like it. Let me know what you think about exactly how to scale up in prop firms and do it the right way. See you guys in the next one. Take care. Peace.